Yeah, just one more, and then
You got the full setup. You got it full kitted.
hey everyone, thanks for joining us today. I see we have around 20 people coming in, but yeah, let's go. I'm Dai, head of community from Uplifies, and I'll be hosting the AMA. We got Simon, CEO of Uplifies, and David, co-founder of Metastreet, here with us, and Karen from Metastreet as well. So we're going to talk about NodeFi, UPass, and how the partnership is going to like benefit like the user in across the community, Uplifies and Metastreet, right? Cool. Do you want to have some quick intro, Simon or David?
I'll just intro the guys. So yeah, I'll let them introduce a bit about Metastreet, but this is actually quite exciting for some of you guys who are aware of like Pendle and the way Pendle works. It's been a very successful protocol for DeFi, and the guys are pioneering this with the node space, which is super exciting. So yeah, David, if you want to introduce yourself and a little bit about Metastreet and I don't know. I won't ask too many questions because I think Dai's got some stuff planned. But yeah, keen to hear more about Metastreet.
For sure. Hi, this is David, co-founder of Permian Labs, which developed Metastreet. I'm here with Karen, who helped set this up. And yeah, I guess quick background about myself. Before Metastreet, I guess I started my career in investment banking, and just kind of focused on structured products for most of my life. I guess kind of the inspiration for all this, and always had a keen interest in trying to figure out ways to create liquidity for things that just aren't very liquid. I guess that's the best way to describe Metastreet. It's like we just focus on assets that just don't have a clear price. Almost all of DeFi does, and we focus on things that just don't, whether it's RWAs to nodes to DePIN to AI assets, which generally don't have a price. And yeah, and did a little bit of MEV and just kind of been in the space for a couple of years. And how kind of we came across NodeFi was we were looking for things that are on chain that will, for one, actually create cash flows. That's kind of like the first thing that we're looking at. We call it object-oriented finance, which is when we went through this entire process to figure out like, hey, out of all the objects, which one's the best object? Instead of trying to do money markets, or like more functions based, as we call it, to bring a parallel. And we found nodes to be like one of the largest TAM assets that like actually people used, people staked, and people actually made yield for. My comparable is always like, hey, if Bitcoin mining started like in 2021, but it didn't, it would have been financed on chain, but the market matured off chain, and that's why you see a lot of Bitcoin mining but be financed off chain. And with the rise of DePIN and rise of nodes, kind of more recently, I think it's been ripe to be financialized, and people just haven't really explored the space yet in terms of this combination of bringing DeFi to things that can be financed. And the first step that we wanted to do is like, what was the best function of nodes right now? Is that you do one button, which is you click claim. That's what a lot of users do like every week or every month. The average duration is about 3 minutes a month. And we know there was a lot of nice infrastructure that streamlined the entire process. And we kind of wanted to split that, kind of like Pendle, and issue derivatives, because at the end of the day, like Pendle does issue like two different derivatives as a result of a very benign and simple asset, which is a streaming yield, a cash flow generating asset. And yeah, YieldPass is a product that effectively is the first financialization layer around nodes, which is that we simply split the yield away from the principal, and we kind of make those more interesting in that you can actually trade them and be more speculative about the underlying asset.
That's cool. Just to give people some context, maybe who aren't aware of Pendle. So Pendle is a protocol, like as you mentioned, it splits the asset into two derivatives. But the concept was typically around staked assets. So you might have mostly volatile assets that have volatile yields. So it might be a receipt token for a vault, or a specific token that might have 10% APR one week and 20% APR the other week. Pendle decided, is there a market where you could actually split out the future yields of an asset versus the principal of an asset. Not going to go into the mechanics of it, but it enables someone to trade their future advanced yield up front. So it might be depending on the maturity period, but it enables someone to actually go, hey, I've got this asset, I can deposit it, and I can actually upfront sell the yield for the next 6 months or the next year if I don't want that yield. Or someone could buy like those yields like directly. So there's a few kind of things you can do with it. But yeah, it's that gives some context maybe on Pendle. If anyone in the community wants more like details on the mechanics of Pendle and what's that breakdown, I'm happy to kind of go into that in a future thing. But it might give some context for this.
Absolutely. And it's kind of like the first use case that sits, I guess, for nodes. A lot of people do not much with it, which is kind of why we've had so many deposits, I guess, day one, day two. Because, well, what else are you going to do with your node? It's kind of like what people with wrap staked ETH. What else are you going to do with a wrap staked ETH? Well, you're going to restake it, and that's kind of the goal.
Over to you, Dai.
Yeah, sorry. Cool. So I think for today's call, we would love to keep it simple and answer the community question and have some fun. So for the community, if you're here, if you got question, you can feel free to drop them in the chat. I know it's a live, so yeah, we'll get to as many as we can during the Q&A at the end of the session. Okay, I think we so what exactly is NodeFi? I think this should be the next part, and how does yield path work, and yeah, just give out the basic idea of this, like maybe for Karen or David.
Yeah, sure. Karen, if you want to take it.
Yeah, no. As David was saying, YieldPass itself is the product in which you can kind of bring that Pendle primitive to your nodes. We started with Aether nodes, but we are cooking up with other projects, other node projects to integrate with YieldPass. But node finance itself is sort of like the umbrella category and just narrative that describes kind of what we're trying to do with YieldPass, which is like bringing DeFi financing and just more liquidity options to nodes that, David said earlier, would just otherwise be sitting there. Because, we do think that nodes have value. Nodes are important to building a decentralized secure network. And we think that it's kind of like the backbone of this like kind of Web3 on-chain world. And we think, nodes are here to stay. We had a really great moment earlier last year with the Aether Zai Carve launches. And maybe that meta has kind of died down a little bit, but we do think that from a foundational perspective, the philosophy and the usage of nodes are there. And so really to continue to like bring this like achieve this kind of decentralized network state, we think nodes are here to stay. And of course, to help, power that, that requires like financing and just like more DeFi options for nodes as well. So yeah, I'll pass it to David to see if he has anything to add, and we can definitely share a walkthrough of how YieldPass.
Just real quick on the meta, it was interesting with Zai and stuff, because I remember nodes going back like way past even Zai and Ether. Like even back in the day, remember the last bull run, there was a Helium, right? Like that was the big retail one, right? Like a lot of people were like jumping on Helium. So it's been around for some time. It's just kind of been renamed over time. I feel like it went to like kind of Deepin and then sort of just evolved. But
yeah, and validators can be a node. Like mining operations are essentially a node as well. Like I totally agree. Like that sort of tech of like, a proof of ownership, proof of like, providing the work to secure the network. Some of that is all captured in what a node is.
Yeah, like Gala nodes, even for gaming, I think it's been pretty common. And I think the more nuance here is that this was kind of like the Impossible guys kind of like pushed it around with Zai, and then kind of let this meta mostly because it's fully on chain, which is why it's kind of cool. Like the entire ownership of a scarcity model. There might be some reg arb in the fact that people are selling slots to the right to mine the underlying asset, which was, I think, the more interesting positioning. Obviously, kind of different with Trump, but also less of a concern. But it is a good way for users to put in work and to feel like they actually are earning the underlying currency, as opposed to just being airdropped that. It's kind of like the foil to the meta of just airdrops. And I guess why it kind of slowed down early in the year is just pure economics. If you put $100 in for a node, and it takes a few months to get your money back, or maybe even a year or longer, that's kind of the issue. It's like once you put your money in, like you can't really put your money in for the next one because it doesn't pump like instantly, like a meme coin. You put money in and it slowly drips. It's more like an annuity. But we're trying to make it so they can borrow against it to trade the missions underlying it, so that maybe the meta can return. In some sense, where you can just cycle through your capital a bit better.
There's a couple 100 million, right? Like there's a lot of money in nodes sitting there. Like if we think about how much we did a raise for Ether, I remember back in March, and it was like, I think the total raise was something like 160 million or something. And then you had like Sofon and you had Zai and you had like a ton of nodes. So there's a lot of capital there that's idle and just sitting there, not really like, well, there's a lot sitting there that's not really being utilized.
Yeah, especially if it's in the underlying currency, which is what this is then. So instead of being a few million turns into a few billion if it comes to the currency itself of like ATH as opposed to USD.
Yeah, I think it's pretty amazing. Like Metastreet is making like a whole new financial system for Node, right? And
yeah, it's just the first. We're pushing along with our next integration right now, which is with the XAI.
Nice.
One more
Do you
after
want? So now I know Karen's pulled the video up. Do you want to walk through? And this is going to be hard for the Twitter users, but do you want to walk through like exactly how it works? I mean, we can break this down further during the call. Like it took me even a little while, like to figure out the different components. But if you walk through that, like I think for users will get a good understanding. And this is going to be this is live on YouTube as well. So for those that want to like a little bit more understanding, it'll help.
On our website, app.metastreet.xyz, there's 2 nice videos. One is called Watch the Depositorial and Read the NodeFi Storyboard. We try to explain it in different ways as many times as possible. By the way, like Pendle also struggled with this a lot when they started. It's like, hey, we have to explain how this works. And they're like, why TPT? So education has been a big part of their journey in terms of just like, well, forming the community in the early days, but also just having to explain how things work. I guess.
Yeah. Let's click into the yield pass tutorial, and that kind of walks through in a couple steps, just like on a baseline, how NodeFi works. But you might hear a voiceover pop up. That's our very helpful team kind of guiding through each step. So and if you're in front of a screen, you'll see what's happening in front of you. But as Simon said, definitely if it's going over your head on Spaces or just audio only, we'll share the link for the video as well. So yeah, let's get started. Actually, I don't know if you can hear the video. Do you hear anything?
I don't hear anything for now.
No, I don't hear anything. It might not work. Maybe we'll share the video afterwards. But maybe walk through it step by step on actually like the user flow. Like just be like, okay, user deposits node, this is what happens. Exactly. And then we can piece it, like break it apart a little bit. I had a couple cracks that explained this to our community ourselves. I think I made a video of this I actually made a good video for this on our community, and I walked through it. It's hiding somewhere. I never put it on YouTube. It was something I chucked in the Discord, but
that's awesome. I would love to see that. Yeah. So as David said, you navigate to our app interface. You click on Yield Pass, and under the NodeFi category, you'll see the eligible nodes that you can deposit. Right now, it's just Ether, but on the tutorial, you'll see Zai as well. And the video says you'll earn X base credits. Really, it's actually been revised to X node crystals for every deposit. And the crystals are part of our points program, so we can talk about that some more later. But basically, if you deposit your node and split it and kind of walk through all the sort of DeFi functions of yield pass, which is the yield tokenization, splitting the nodes into different tokens. The second step is borrowing against the principal token, which we call the discount pass token. And then the third step is providing liquidity between your yield token and the borrowed funds. So completing all three steps will enable you to earn points through our rewards program as well. And that's credited back to you on a per day, per node basis. But yeah, back to the beginning, you deposit your node. So you click deposit, and then it'll just walk through, how many nodes you have in your wallet to deposit, how many you can select to deposit. You don't have to deposit all of everything in your wallet. And a module will pop up allowing you to kind of select which nodes. And you'll notice that only a certain amount of, you'll notice that some node ops providers, names you might be familiar with, come up. And David can speak to this a little bit more. But in order for you to be able to use Yield Pass, you'll have to delegate your node first to a trusted node as a service provider like NodeOps, ImStones, EaseFlow, or Zentry. And this is just we're not able to support self-delegation at this moment. But yeah, so it'll show which of the nodes are eligible under the node management provider. And then I'm just going to walk through the confirm selections. And then, so yeah, this kind of walks through just the three steps that, the three kind of DeFi steps that takes place under Yield Pass, the tokenization and the splitting of the nodes, the borrowing against the discount pass, and the LP. And we bundle all those three transactions into one kind of just transaction you can sign off instead. So the first step is splitting your node into a Yield Pass token and a Discount Pass token. And so the Yield Pass token is similar to the YT from Pendle, and the Discount Pass is similar to the PT. Yield Pass represents the amount of emissions that you would get otherwise if you just held the node, and that tokenizes all those future emissions into one token that you can trade and is composable with, any sort of DeFi platform. And then this discount.
Just to add one thing, Karen, one thing that I think was not too much in the tutorial, I think is a really good thing to highlight, is actually the expiry date at the top.
Yes.
I think that's like really important, because it's not the emissions forever for your token. And this is one thing that was kind of missing through the tutorials, because I understand, obviously you have maturities. Pendle, you have multiple different maturities, and it's just the yield for that period of time. So when I understand it correctly, because before I was kind of confused on what's the point of the DP without, what's the point of a node if I've stripped all the emissions out, right? And I was sort of not understanding that there was basically a singular maturity, singular expiry date, and the yield pass is only the yield for that expiry date period. So let's say it's 70 days.
Yep.
It's the yield you're basically you're tokenizing the yield for that 70 days. After that 70 days is over, then you go back to having the node that that you can go back to getting to reclaiming the whole node. That's the emissions from that point plus the node itself. I think that was really important, because it was like it was understanding of like how long emissions for how long, how does it work, everything like that. But like that expiry date, I think, is key.
Yeah, no, completely. And so, yeah, the expiry date, you can, if you scroll back up to the left top corner, that'll tell you how many days you have left in that vault for kind of the claimable emissions. And once that expires too, you can start to then like claim your discount pass token for the node, and the YP token for the, in this case, the ATH token emissions. But theoretically, within those 90 days, or currently the pool has 67 days left, you can do all sorts of things with the YP token and the DP token once you've split your node and minted them. And so one is you can borrow against your DP token. And so right now we're offering 0% borrows on Yield Pass. So if you deposit your DP token, you can get about, I think, 10% LTV from your DP from your node, and then you'll receive ATH, which you can then provide liquidity for. And so you can provide a liquidity for, so the pair is one YP token and the borrowed ATH. And you'll be able to earn some swap fees by becoming a liquidity provider. And the important thing to note is, so after the expiration date, you do need to pay back the loan. Otherwise, if you decide to LP, otherwise you kind of, if you don't repay the loan, your DP token goes into default, and you risk losing ownership of your loan, ownership of your node. So something to really monitor and consider over the days too. Like, this is really great for providing like some liquidity options for you, some like potential yield options, and obviously rewards from us too through our Ascend program, which we can talk about. But because you are splitting your nodes and putting them into kind of these different channels, it's kind of important to understand where it's going and what can happen if you aren't monitoring it closely.
And mostly with the IL, right? The impermanent loss, that would be the thing, because you could just, you'd have the yield, the accumulated YP ATH that you could use to repay off that loan, basically. But if there's impermanent loss, it might be an imbalance between the amount of the ATH you have and the amount that you see in the borrowed. Question regarding this, actually, because that was interesting when I was digging more into it. Like, how you guys, like, who is the other side of the equation when it comes to like the borrowing? And this goes a little bit as well for the YP, because my understanding of the node emissions for Ether are also, they distributed as the VATH, right? So they're not necessarily liquid up front. So how have you guys gone around that side in terms of like the actual, I guess, like the lending for the borrowing against the DP node?
Yeah, a lot of the upfront engineering had to be done with us and Aether, just obviously because there's a lot of restrictions in place on chain, and all the parameters are there. I guess we're kind of like the guinea pig of like, hey, what happens when it is liquid? I'm like, well, you can actually use it for more interesting DeFi use cases. I guess that's one like a handicap that we kind of run with when it comes to integrations. Is like, unlike Pendle, which can just start their product immediately. We have to do a little bit of a relationship development with these protocols and just trying to figure out how to, well, collateralize underlying assets. So the nodes are actually insider contracts. That is actually technically a collateralization of the underlying asset. It's not necessarily like a price transaction, but rather just a collateralization that you have under a loan, that is actually what happens. That the underlying asset is put on risk in order to provide a loan. Well, first the derivatives are minted as a result of you depositing your node, and then we do all the DeFi stuff around there. So only one thing had to happen there, which was that the node had to move into the Metastreet contracts. As for the VATH, that too as well is kind of held inside the underlying asset. It's kind of why we issue the derivatives, which is like the yield pass and the discount pass, because then we don't have to deal with all the dirty mess of like, hey, what is VATH? VATH actually isn't even a token. It's like a credit system inside of the ATH emission contract. So there's VATH, which is the right to redeem for 180 days. for the ATH, and then you can restake your ATH into VE ATH. So it was they kind of made it a little complicated. I'm sure all the node holders understand that. So VETH
and there was the staking contract for ETH is like on Ethereum, and it's like $60 gas fees. Like it's
yeah, exactly. It was kind of, well, dealing with the VATH, not the VEATH, but just the V, no E. That was a little cumbersome, and we're still trying to improve it right now. So everything we're doing, it's like it definitely works as it stands, but there's ways to improve it in terms of optimizing for the redemption process. But yeah, users can start, redeem at the end of maturity. That is kind of like the trade-off, is that folks like slightly delay their redemption button, which I think a lot of them don't press it anyways for every unless it's every other month. And then that in exchange for that, you get trading fees, and then you get node crystals. So that's kind of like been the trade-off that people have to make.
Will you introduce more maturities? Like once this finishes, will you open up a new one? Like how's that going to work in terms of like, so you have to withdraw my node and then deposit back into a new maturity. Will you keep them going, or is it just a limited time thing? What is the plans for that?
Sorry, could you repeat the question?
So after this maturity ends, so it's obviously in 67 days.
Oh yeah.
Will you introduce new maturities? How will that work?
Yeah.
Will the users have to withdraw again and deposit? Like how you play with that?
Yeah, we that's kind of the goals, is that we plan to launch a new maturity closer to the next one, so where people just roll over into the next, kind of like Pendle, like every time there's a maturity, like here's a new one, and then you go on to the next one, and yeah, that's kind of the goal here. It's just, and then we'll also introduce longer maturities as well.
Cool. So you have multiple options. Okay, that's pretty cool. So the DP tokens themselves can't be traded, or can they be traded? So that's maybe a differentiating factor with Pendle. So again, without going too much into the mechanics of Pendle, like you end up with sort of the principal token ends up at a discount, right? So how does this work in this front? Is the DP token like tradable, or how does that work?
Yeah, DP token's not that tradable, because, well, the underlying asset is not tradable, and usually we will work with the protocols to make, they're not trying to proxy a specific value, they're just trying to create use cases. So you shouldn't trade it. I mean, technically you can move it to different wallets, but only the same wallet can redeem the underlying assets. There's no value to it. This is definitely more interesting once nodes are transferable, which all these protocols, all these node protocols have indicated they will happen. Where it should be trading at a soft discount, because it's an X dividend of the emissions of the yield pass. Yeah, I mean that's what we expect to happen as well, just down the road. But right now it's not a function yet. That it's a Boolean, so we'll turn it on when we need to.
There'll be some interesting pricing. I think nodes will get really interesting once there is like a market, for a secondary market for these nodes. They'll get really interesting on how they're priced, because it will be like, it's sort of going to be like banking on the future value of emissions, right? It's like it'll be interesting. So I'll be like, the emissions over 3 years are currently worth $1, but we think they're going to be worth either $3 in the future, or we think they're going to be at a discount. And then you have like, okay, well, I'm selling a node that has limited liquidity, limited, like, it's vesting over X amount of time. And so it's kind of like secondary OTC positions for like VC deals.
You're describing exactly why Metastreet exists, which is that, like, what is the price of this stuff? Like you can't, like, no matter what oracle you use, like the truth of the matter is, like, the price is very iffy. Like you really don't know what the true price is, unless it's traded at $1 million a minute. Like you're like, okay, what really is the value of a car if it's traded once a month? Like, is it this price? Do I do it on the cash flows, or do I do it on the last price? Like, To your point, like if you discount it to all the emissions in the future, like what's the discount percentage? Up for debate.
Well, that's an amazing. That's why Metastreet's exciting, because that's actually what Pendle thrives on, right? It's the future speculation of value. Like Pendle struggles actually. Even things like anything with fixed yield is always challenging with Pendles, because the whole concept is like speculation on the value of future yield, right? Like, so point programs are great with, like, anything in Pendle has thrived off the point programs because they have no like predictable value. It's super speculatory. So anything to do with speculation and like uncertainty around price like thrives on this stuff. So it makes fully sense that with nodes you've got an asset that is like sort of up in the air of what its value is, that you create a market for it.
We're also gonna, our next product after this, after our first few integrations with live protocols, these were especially designed, the ones we selected obviously with high TVL were selected because it's kind of a proven thing. But the points trading thing wouldn't have really been possible unless they had that fixed yield adapter. And that's kind of what we're leaning towards as well. There are a few node products that are fairly exciting, that are actually only emitting points before their emissions actually launch. And we'll be integrating those pretty soon. So you'll also have node point trading platforms, where you don't know the value of your emissions yet, but you are emitting value. You're kind of seeing this with like some other protocols. It's hard for us to integrate non-node licensees yet, where there are emissions that are uncertain. I think like Barrow would have been interesting if they had some collateral for like the initial validators, but right now it's a little held off for the moment. But yeah, no, it's definitely like exciting stuff. I think it's the very, very early days of the financialization of these kind of assets. But this also just kind of gives you like a little sneak peek into what this can be used for outside of just nodes. Nodes just happen to be the most like easy to do because it's a 721. But it's not transferable. But you can't split assets that don't have a price. But for Pendle, you need a really deep liquidity for the spot market for an underlying asset. Like you really need, like, for Athena, you need a very deep market for USD to USDC to like to USDE. Otherwise, the entire protocol doesn't work. For us, we don't need a spot price. We modified it so that you don't need a price for any of the underlying assets. We're trying to create that market. And then
that's one of the biggest issues of Pendle, right? The liquidity is you need like so many millions in like deep liquidity for the markets to work.
Yeah.
That most of the time it's really, really tight. Like there's on their own whole AMMs and everything, but it's so hard when you need that much liquidity for each market.
Exactly. We're Oracle-less, and we understand that our assets have no liquidity. In a sense, we are the bypass product to get around the fact that you have no liquidity. Like like in traditional markets, if you want liquidity on a house that doesn't trade very often, you borrow against it, or you try to get a HELOC against what you think the equity value is, which is based usually on its cash flows. But there's ways around spot liquidity and trading and mark to market, which is what people usually call it. Just like how often is it marked relative to the value against the market, or how often is it traded? Not very often. If you look at like Bitcoin to your real estate, we call it annual turnover, which is like how many times of daily volume does it take, or daily turnover, how many days does it take to cycle through the entire value of the underlying asset? So if it trades $1 million a day and it's worth $1 billion, it'll take about 1,000, right? So for Bitcoin, it's about 20 to 30 days. You will cycle through the entire value of the Bitcoin valuation based on daily volume. For real estate, it would take 10 to 20 years. Like it's not very liquid at all. It's a very different understanding of an underlying asset. So once we move past nodes, to my point, you look at hardware. You just go back to the underlying like real world assets, right? You can now use this technology for like our next category we're gonna do is depend. So we're gonna look at GPUs, which are very liquid. That market's okay for it, or like even like hardware used for a depend network. It's like you can also split that now digitally. You just issue derivatives against Wi-Fi piece because you have the hardware itself and then the emissions that it makes. But yeah.
We're actually launching a project, so it might be worth an introduction to them. They're kind of building an aggregation layer for DePIN, so there might be some cool stuff there. Yeah, Died, would you want to kind of dig in? You must be getting some questions from the community as well. So is any questions coming up?
I think we cover a lot of ground with NodeFi and YP. I think we can bring it back to Amplify. Like how does NodeFi and UPAT benefit like our node owner, and yeah, maybe Simon, you can go over that, like, or David,
Yeah.
like.
Well, so we have obviously a lot of like Ether node investors in the community, even through us, but also some that were like regular Ether node, have Ether nodes. We did Carve as well. We did Rivals. So we did a couple of node sales. The key is, I've done this as well. Like I jumped in on this and with my nodes. The key was, yeah, it was kind of a cool experience. It was like, hey, cool, I've got this node sitting here. I'm not really doing anything with it. It's literally sitting in some MetaMask wallet somewhere. It's just collecting emissions and I forget about it, right? And I was like, okay, cool. How do I make this more productive? So there's a few ways, like as David said at the start, it might be like, hey, look, I want to get some money from this node. If I was to do it normally, like I would have to unstake my VATH and then I have to wait 180 days, and like there's not much liquidity behind it, right? And I can't do much with it, right? I can't sell it on a secondary market. I can't do anything. So what I can do is I can take, Eclipse node holders can take that node and they can go to Metastreet and you can do a couple of things. So one thing, and this was mentioned before, but just from a simplified perspective. So I can essentially get my emissions for that maturity period. So like 70 days worth of emissions for my node upfront. And I can sell that. I can get that in ATH upfront. I sacrifice that 70 days of emissions, and I can sell that ATH directly to get cash, right? Or you can just take the DP and I can borrow ATH against that. That's one thing I can do. And then I can actually LP it. So yeah, well, we walked through this before, but like it's essentially like there's a couple things. You can either get, sell the emissions up front. Once you've sold that emissions, you obviously don't have the YP, but after the maturity, you get your node back. Or yeah, you could do the borrowing and LP, so you can kind of make it a bit more productive and get some swap fees in the meantime from everyone trading between the YP and ATH. So it's not rocket science. I mean, like Pendle is quite complex. I think this is quite a simplified version. You're essentially just you've got the ability to sell your upfront yield for that period of time, for that 70 days. It might be at a discount. Depends on what the market is pricing that yield at. Like if a lot of people sell, like the value of that, that YP might be lower, and so you're actually, you might be at a 10% discount, 20% discount, depending on what it's trading at. So you just got to factor that in. It's more than likely that yield is trading at a discount, but there might also be opportunity for someone to buy the YP. So if you want to make a trade and you think that I believe that's right, you could buy the YP and collect that emissions over that period of time, right? So if you want to actually if it's trading at a discount, let's say it depegs by 30% and it's trading at a 30% discount, you might make a nifty little profit by buying those emissions at a discount. And then, obviously collecting that over that period of time. So there's a few things you can do with that. But yeah, hopefully I explained that well, but that's sort of the benefit for Ether holders is, yeah, drop your Ether nodes in and get some, either some upfront cash, or you can do some fun things with it.
We priced this so that it's about, we looked at the historicals for where the daily emissions are. It's about 32 ATH a day for the nodes, with a small quarterly bonus, which is integrated. So we actually priced it close to par. But in terms of deposit and sell, we are kind of like introducing that in one big announcement pretty soon. So people can also just deposit and sell their yield in one go, as opposed to and then they can redeem it at the maturity. But they're effectively selling of their future emissions right now, as opposed to and then they just wait until the maturity to redeem the discount pass. That's actually one of the questions I saw. What happens to your node and emissions? You can redeem your underlying node with a DP. That's the most important one. You also have, if you LP'd it, by the way, with the node restaking, you do have to repay a loan. So you unwind your LP for the YP, and then it repays a loan. It's all done automatically for those who don't want to deal with all that. But as
what
long
if you
as
have
you have
IL though? Well, if you have IL, will that repay the whole loan, or will there be outstanding amounts?
the IL will also need to be slightly covered. But in terms of, I mean, whatever you're losing or gaining. But so yeah, you do probably need to come up with ATH down the road, or you could just roll it over with another loan. That's another solution.
Okay. What do we? So regarding the what do you expect? What do you know the current states on the peg between YP and ATH? Like, what is your expectation? Like, what's the current one, and what's your kind of expectation where the range in which you see it sitting? Like, is again you say it's at par? It started at par. Like, do you think it's like? It depends on what people do with it, right? But like, where do you see it sitting? Like 10% discount, 30% discount? Like, what's the sweet spot range? Do you think?
That's about right. Depending on the duration length. So ours is only 7 days, so there might be some action. But we're planning to introduce a 180-day like pool. So I think there'll be a lot of demand for that kind of product. It's like, hey, that's half a year of yields. Like I want that now. So the bigger discount, that's actually where the market, that's the purpose of our protocol, is like, what is that discount value over time? Like, should it be 20 or 30% or 40% or 50%? But at a certain price, people are just going to buy it. They're not even going to, they're not even going to start selling. The selling will stop because they're like, that's too low of a discount. So that bid-ask spread is that percentage that we're trying to like uncover. And that is the spot market, I guess. It's like the percentage per, how many ATH is YP worth, or the yield pass, or just basket of 180 days of emissions. Like, should it be 32 a day?
Yeah, it makes sense, and that's exactly where the rev for the LP has come from, right? It's always about like that, like speculation on, okay, this is cheap, this is expensive. Like, you know, some people might get desperate and say like 30% discount. It's, you know, that they still price that as, okay, this is discounted, but I'm getting it up front. So, you know, it's like if I lose 30% now, but I make 100, like I make 10x trading a meme coin, do you know, they might like look at that and go like, money now versus money later, which is always the key. Where someone else might be like, hey, I'm more conservative. I'm happy like holding long term, you know, more stable assets. I'm going to take that, you know, 30% discount, and you know, I'm going to get, you know, I'm going to wait and I'm going to collect those emissions over 180 days, but I've got myself like a pretty stable discount. Then you can build vaults and all sorts of stuff on top of this kind of stuff, right? Like, yeah, it's pretty cool.
Cool. Yeah. Okay. Cool. I think also for those who new, there's a channel for Metastreet on our Discord. So it's got all the detail you need, plus a video guide by Simon to help you out, and it should be super easy to follow. So make sure to hop in and check it out and participate. Yeah, it would be great to have you involved. Okay, we can switch over to the live Q&A now, and we'll be going through some questions from the community. Let's see if we have any. So yeah, jump in if you got anything to ask or just want to listen. Yeah, I believe we already covered this one, right?
Yeah.
I think we covered a lot of stuff. I think we covered a lot of stuff.
For the YP, you also redeem that for the underlying asset. These are just like kind of tickets to redeeming into underlying. So you can redeem whatever number of a yield pass that you have to redeem that asset. But yeah.
Yeah, cool.
Makes sense. It's cool. I like what you guys have done. I think it's pretty cool, and it opens up a whole new market. So looking forward to you guys being the Pendle of nodes. It's gonna be fun.
Yeah, that's it's the first too. So while nodes is, I mean, we are somewhat. If you notice, we do a lot of stuff. We try. That's why we call
NFTs and stuff. I've noticed. Yeah, I've noticed you guys did NFTs and stuff as well.
We did NFTs, we did RWAs, we did future values of NFTs. We actually did this for NFTs as well, with something called airdrop pass, where you trade the airdrops of NFTs. This one had a lot more success because, well, it's more benign, simpler assets, and the underlying doesn't move down in price that much. Whereas for airdrop pass, which is the product we had for NFTs, the underlying moved too much because after the dividend, the underlying just tanks, right? So it's like, what exactly are we trading here besides just realized value in the underlying asset? Or for something like Pendle, like if it's USD based, like it's very similar to nodes, like just won't move in price that much relative to the points and stuff like that. There's no X dividend, which is the financial concept here.
Cool.
Seems like we got another question here. After it will end at the maturity. So at the maturity, it's a new chapter that sets every time. So if you're selling like now, like hey, I'm selling my YP even 1 day before, the next day, once it's all matured, your VATH is exactly it returns to par and it's made whole again, as long as you have that DP. And the YP you can just redeem for whatever value it is. That's done with our protocol.
Dude, that's sick, by the way, Dai. Is that the Twitter comment literally added to the bottom of the stream?
Yeah.
That's sick. That's cool. Like literally like the person in the question. That's epic.
It's a comment. Thanks, Elisa.
I think
very solid.
I think we maybe take one or two more questions and then look to wrap it up. I think we're coming up to the hour. But yeah, from my side, it's been a really good call and good to hear. Hear about NodeFi and what you guys are doing. I'm curious, what would you say, like for everyday users, what would you say like the most, it's a hard question because it's, as you said before, it's a different market. In my mind was like, what, from your experience, what things in TradFi like are the most similar to kind of what you're doing? And like, I know with Pendle, it's like stripped bonds or things like that, but because it's a different market, it probably acts very differently. I was curious to hear if there's any because we like a lot of DeFi is, the regular market, like kind of being a lot of stuff from TradFi getting ported over and adapted to DeFi. I was curious, like what that kind of, what's the representation of that in TradFi?
It'd be stripping the land from the rent. So if you own a piece of land, and you have a rental business on top, that's a core difference. And the DP is like a mortgage against the land. But stripping the underlying asset from its full value. I mean, the cash flow generating business from the principal business. It's how most capital markets work. So like if you like even automobiles and stuff like that, they like how much cash it generates versus the underlying value. And you usually choose one of those to give a loan against. But yeah, the rental business, like the Airbnb, and then you have the principal business, which is the mortgage and underlying asset, the value of the house, the value of the land. If anybody's seen like that movie about the founder of McDonald's, right? Like that was the core business. So, like you have the REIT of the land, and then the McDonald's on top. And the McDonald's
real estate is the main business. Yeah,
real estate
is the main business.
Yeah,
interesting.
Exactly.
So what if your nodes go? Do you want to push that question on? On below.
So that's actually very often people have been asking, why is my nodes invalid? Is because your subscription is only 1 month long. Your subscription has to be greater than the number of days than our node. This is actually why we don't allow self-hosted nodes, because of this risk. You have to be with one of our node operators, EaseFlow, NodeOps, Imstones, Zentry, as like otherwise like we just can't support it because of this risk. Like somebody could just turn it off, right? It would just stop doing work, and then yield pass everybody would suffer for yield pass because it's just not doing work 100% of the time. It was only really with the NAS providers that this product can't be possible, because the node has to be in operations the entire time. Otherwise, like there's no rent, there's no McDonald's on top.
No one's running the Airbnbs.
The
no one's
flows.
running the Airbnbs. How could there be cash flow if no one's cleaning or maintaining it?
Exactly. You want somebody to do the Airbnb for you. You don't want to manage it yourself. Is kind of the main point, because then you know for sure that it's going to be max utilized at all times. That's if the nodes goes offline. Well, we're hoping that doesn't happen, but if it does, it's also baked into yield pass. We're hoping that it's also systemically similar. I mean, we're already at like close to 20% of all of the nodes for Aether right now in terms of collateralized in our network, about 200 million. And I hope it doesn't. I hope it doesn't break in terms of the yield that's being generated.
I feel like real estate's also a difficult comparison because it's like I feel like this would be good in education, right? Like exactly this, like the rent from the house. The challenge with the house is the land have as kind of a value, right? Like the land value isn't just based on the rent. Whereas I feel like with nodes, it's really based on the rent. Whereas like I think land is not just based on the cash. Like the pricing of the land isn't just based on the cash on the cash flow that land makes.
That's fair.
It's sort of more nuanced. So it's like, yeah.
I would say maybe then the best comparable would be closer to invoice financing and stuff like that. Like you're getting the liquidity right now for like a sale you're doing in 90 days. And the business itself is the DP, or like invoice factoring. But if you're doing a sale in the future, you're effectively creating that market for it. That's another similarity, but I guess the real estate one's a little more digestible in terms of a comparable.
Easier.
This is also bond stripping in a sense. Like it is effectively the same thing. We're trading the value of the underlying, but obviously these are actually maybe better representation of bonds because the nodes one day do stop emitting cash flows to a certain extent of just like fewer airdrops. It's actually when the market gets a lot more interesting because it's really based on labor as opposed to just doing like some level of work. Yeah.
Nice. Amazing. Great call so far. So I think, Dai, we wrapped this up.
Yeah, I think they pretty much like, it's so great like what you guys doing. I think you guys making NodeFi accessible, and like the user, they don't have to be like a tech expert to get involved, and I like that. So yeah, I think that's where thing gets interesting. Okay, I think we could like really wrap it up here. Until next time, guys. Like anything you want to ask or share before we wrap it up?
I've got two questions here, but like just maybe real quick. I'm not too sure the mining rewards from checker nodes and bonuses. Users still got this. I'm not sure where that sits because which ones are the mining rewards from checker nodes? Isn't that what people claim? Yeah, we got to jump.
Yeah.
Oh, good. We can ask those questions in the Discord. So any outstanding questions, I'm sure you can ask in the Telegram or the Discord channel. Yeah, we've all got things to get to. So thanks, guys. Thanks for your time. Yeah. Thanks, Dai, for hosting. Nice to meet you, David and Karen. And
thanks. Yeah. Thanks so much, guys, for hosting. See you.
Awesome. See you guys. Catch.
Nice.
Nice. Good? Oh, we still alive.
We're still live.
Hey, guys. Hey, Eclipse, sir.
Make sure to like and subscribe below.
Yeah. This is Simon and Dai. Let's fucking go. Oh, shit. Sorry.
Hey.
Okay.
Okay.
Catch. Bye, guys.